Good morning, traders. It's 8:02 a.m. on Thursday, the 17th of November, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overnight, we've had a couple of things to be concerned about. The overall sentiment overnight is bullish. Allocation of capital is moving towards risk. The U.S. Treasury bond is the worst performing futures product that I'm monitoring, down 46 basis points, followed by the Japanese yen. The DAX and the Euro stocks have been laggards all throughout the overnight session in the U.S. And of course, then it's followed by the 10-year and the U.S. dollar. The leader of the pack is crude oil again. For those who were here for the crude oil release yesterday, um, Russian energy minister said that right after, or actually maybe even during the number, the energy minister said that they are working towards. He's confident that they're going to come up with an agreement to limit supply, and we watched crude shoot up from about 45.40 to about 46.40 in one quick move. I'm sure that upset a few people. The next strongest product is the Russell, followed by the Bund, and then the U.S. The other U.S. indices follow along with the euro. So overall, allocation is to risk this morning, although we're trading 21.74. We're not really pushing above yesterday's range or anything. We're actually in range, in value, in the ES, and so the overnight session didn't really accomplish much. Very, very tight and very balanced. Anyway, what's on deck for today? Fed's Yellen speaking a little bit later. Let me see. Fed's Yellen is due at 10 o'clock Eastern, but before that, we had the initial claims this morning, CPI, housing starts, building permits, and Philly Fed. Philly Fed came in at 7.6 versus 7.8. Housing starts were stronger. Initial claims were better. The lowest since 1973 in initial claims. Continuing claims 1.98 million versus 2.03, the lowest since 2000. And the comments released by Fed's Yellen say that the rate hike could be appropriate relatively soon. No mention of U.S. elections in the remarks. This is all prepared text, and she's going to testify in approximately 1 hour. So that's what's the main thing that's on deck today. Going into the session, the Bank of Japan released information about a new bond buying program, and there's other news that I don't really need to cover. But the main items we're looking at for today is Fed's Yellen's comments. But we also have Fed Dudley speaking currently, and then again at 9:10 Eastern. And then Fed Speaker Brainard speaks at 12:30 Eastern this afternoon, and then ECB Speaker Pruitt at 4:45 Eastern this afternoon. Let's take a look at what we expected yesterday. Here's the main idea behind yesterday's context. That was expected, did not play out. The market instead just sat in the middle, covered very, very little range. The expectation is that the market will likely push towards that upper high volume node and then rotate down and consolidate throughout the session only to rally on the close. Now, Hypo 1 did everything that was expected here. Really tough trade yesterday. Not much movement or opportunity. But did not end up rallying into the end of the session. So Hypo 1 was only partially correct. Hypo 2 was looking for a stable kind of sideways trade. Again, a push up high on the right after the consolidation on the open, push towards that upper HVN, and the expectation is for it to rotate down just like Hypo 1, but then the expectation was for it to start moving lower and potentially test that 2157 MC point of control. Did not do that either. It essentially performed the first portion and then just sat sideways. Here's what it looked like. There's your consolidation on the open, just like I show in the expectation here. Little consolidation on the open right there, and then the next step is to test up, rotate down. For Hypo 1, the expectation is it consolidates, then it starts to push towards that 2179 area, and it just failed to do so. It pushed to 2176 or so, rotated down. We went neutral on the day by taking out the IB low, and then it went sideways. The profile yesterday was completely boxy, Gaussian, with a pretty tight value area. The expectation, since we're opening inside of this today, the expectation today is that this is likely to dissipate. Volume yesterday was low, was relatively lower than normal. It tended to trade at about 15 to 20% below expectation per 15-minute time slot. So what we're doing is consolidating again. Currently, we're trading right here at 2174 quarter, 74.50 in value, in range and in value. Overall, there was a lot of positive delta yesterday. As the market pushed up, you can see that there's just positive delta continuing right here. It sat sideways, but on the close, it does climb. The higher time frame delta, and I'm filtering for 90, anything greater than 99 contracts, 100 lots basically or higher. You could see that was positive throughout the session as well until the close. Overall, it seems to be taking in a deep breath here and setting up to potentially push higher. We'll see what happens. It's hard to predict from where we are. We've had a day of full consolidation inside of the prior day's range. So here's what's going on here. I'm going to extend this profile forward to see what we've built. So this was Monday. Okay, we've been consolidating in this range for a fair amount of time now. This was Monday. Tuesday fills in a little bit higher, and then yesterday just continued to fill in a little bit higher as well, and it just continued to push more volume to the upside. So it built this and this in the last couple of days. We still have a lot of volume below us. We still have the untested or lightly tested area between 2147.75 down to 2143.75. That 4-point range creates a really good opportunity for a trade if we start to fail below the 58.75 and 59 point of control. That's right here. Okay, the information, the details for this profile are: it starts on the 7th of November. The point of control is at 2159.50, and the delta is very, very positive within this range. Okay, so that's how things are shaping up. With regards to what happened yesterday, let's take a look at the overnight session. You can see here just a terrible range yesterday, terrible overall trade, just completely sideways. There was no sign of OTF or higher time frame participation yesterday at all. It's like the desks were closed yesterday and all they were doing is hedging existing positions as opposed to initiating or liquidating others. So we went from a profile that was a rally that was pretty decent the day before to this tight consolidation. Monday had some pretty good range with a pretty good, pretty decently shaped profile. Yesterday was just completely trapped within itself, and then the overnight session carries that over. So you can see here the overnight session point of control is inside of the prior day's value, but it mimicked essentially the same process as yesterday. It tested higher and then it just went sideways. It did not go neutral. But overall, the overnight session is just telling us that volume is very light, 155,000. It's the lightest in the last 11 sessions or so, as far as I can see. And so there's just less and less participation as we head into this Friday. I want to remind everyone just ahead of time here that this time next week, Thursday of next week, is Thanksgiving, U.S. Thanksgiving Day. It is a national holiday. The markets are open half day. You're likely to see really, really dry trading starting Monday. A lot of families, schools are out Wednesday through Friday. A lot of families go ahead and take Monday and Tuesday off, and they take off tomorrow. So tomorrow, the expectation is that the market is likely to make a move early in the morning on the open, and then it's likely to go dead, and it's likely to continue to be dead the entire week next week. That's the traditional holiday. This kicks off the traditional holiday season, where it is definitely not beneficial to traders. And so we have next week, we have normal trading hours Monday, Tuesday, Wednesday. We have a half day Thursday. We have a partial day Friday. However, the big traders in the general public tends to take off this entire week and travel. It's one of the busiest traveling weeks of the year in the United States. So that's what we're shaping up for going into tomorrow. So I just wanted to give you a heads up in case you were surprised by how little participation there is next week. As far as what we're expecting going into today, same old, same old. We're still inside of this MC zone. We are still inside of the yesterday's range and value, which was inside of the prior day's range. We still haven't completely tested the close up top. We still haven't. We did push. The overnight high did push to 2178.50. Yesterday's overnight high pushed to 2185 even, which was the all-time high set on the 23rd of August. And we have just been sitting sideways almost in a staring game to see who blinks first. But overall, the trend continues to be higher. If you look at how the market has been trading recently in the short term or in a larger time frame, we're still looking at the market pushing higher. So it may want to, since it seems to have dried up, there's still the potential for an open auction again, given where we are opening, an attempt higher, and then a push lower. To why would I expect it to push lower in auction, in a normal auction? Generally the stronger push happens after we have tried the opposing direction. So a strong push into the all-time high is more likely to take place from lower prices. The market generally tends to push lower, invite buyers. It advertises lower prices, invites buyers, and then it sets up a balanced day, a neutral day, potentially neutral extreme, and then starts to shoot up, and now it has the energy to push through and get to the all-time high. But for our primary hypothesis, I'm looking for it to test higher. I'm looking for it to get below yesterday's low, push into the 67.50, consolidate, and end up somewhere back in the range. That's the primary hypothesis. It had its chance yesterday to really push through, but it could still do it today, and that would be the second hypothesis. Today's second hypothesis is an open auction again, push down, and then consolidate, attempt down, and then start to push higher and squeeze its way through to the weak high we've left behind from the last couple of months. 2180 and a quarter is probably the target we're going to get. We're more likely to get, given the compression in range and the drop in the VIX recently. The tertiary hypothesis has to do with the market testing up, strong up, and then dropping hard, but it's not very likely. The probabilities for that are fairly low. I won't cover it here. So that's what we've got for today. And as usual, just guard your account until you see a clear positive probability to step in and risk some money to make some money. Good luck, and I'll catch you tomorrow. Take care.